Some stocks, they just can't catch a break in this market. Last night, we got results from Columbia Sportswear. That's the house of apparel brands you know as Columbia, Sorel, Mountain Hardwear, Prana, among other things. Now, the company reported a fabulous beat and raised good guidance here. 20-cent earnings beat off a $1.55 basis. Higher than expected sales up 14% year over year. Even better, management raised their full year forecast. Yet the stock fell nearly $3 or 3.15% today. Why? Well, in parts because maybe the company only raised its guidance by 5 cents a share, which is pretty conservative given that they just delivered a 20-cent beat. But perhaps also because some anonymous Chinese officials told Bloomberg that they're doubtful about the prospect of reaching a trade deal. Columbia Sportswear is widely perceived as having too much China exposure, both as part of its supply chain and as an end market. This is something that's been holding the stock back all year, even though the company's reported 3 straight beat and raised quarters in a row. I think it's nuts. When Columbia peaked at 109 back in February, Wall Street only expected them to earn $4.08 per share. Now the company's guiding for $4.70 to $4.80, and the stock has pulled back to 90. Sooner or later, I think the market's going to give this thing the credit it deserves. But do not take it from me. Let's check in with Tim Doyle, the president and CEO of Columbia Sportswear, get a better sense of the quarter and where his company is headed. Mr. Doyle, welcome back to Mad Money.
Thanks, Jim. Great to talk to you.
Tim, you've got some accelerating brands I want to talk to first before we get to this China issue. Sorel, this is a remarkable brand. It's almost as if you just launched it. How did it suddenly get a re-acceleration that is pretty dramatic versus all the other brands I follow?
Well, you know, it's really interesting, and I think actually probably was missed in yesterday's announcement, but Sorel's third quarter was up 27%. You know, if you remember, Sorel's an old brand, frankly. It was started in the 20s in Canada and was really a men's work brand. It caught fire a little bit in the 90s when it became really the snowboarder's snowboard boot. But frankly, we've converted that. I shouldn't say we. It's really been our management team at Sorel that's converted that brand and its entire reputation as a functional product into a women's fashion footwear brand, and it's been very, very exciting. It's really where the convolution of fashion and footwear function come together, and it's been very widely accepted, and it's really been a real key story for us this year. And again, it just proves the power of footwear. We had nice growth, and on top of significant growth in historical periods. It's going to be a really big brand someday.
All right, let me drill down on that, because when you say that it's the footwear, what you're really, I think, for our viewers saying, it's organic. It's not like you're taking out full-page ads. You're not doing these large TV commercials. It's just people see it on other people's feet, and they buy it.
It's amazing. You know, it's an incredibly successful product based on its product attributes and the brand's reputation. So we're very excited about it. Big opportunity there.
Now, you are got something very exciting that, again, I didn't think get enough talk on the comm call. And I may not pronounce it right, but it's SH/FT Footwear, your new footwear line.
Shift.
And it looks like
yes.
that, to me, that Shift is something that I should be wearing, but also my kids should be wearing. Is this some sort of universal message? Because they're really pretty cool.
Well, thank you. We really we're looking forward to great things from Shift. You know, when we talk to our customers about what can the next opportunity for Columbia footwear be, we say, you know, if you took an athletic shoe and a hiking boot, put them in a box overnight, that's what you'd come up with, and that's Shift. And frankly, the reception has been terrific, especially in these boutique sneakerhead shops, not only in the U.S. but in Europe. It was a small launch in terms of product, but frankly, the uptake was quite compelling, and it's gonna be the genesis of a number of different products from the Shift launch in that same family that we're launching over the next several seasons. It's pretty exciting stuff.
Is Shift being traded on one of these stock exchange kind of things where they trade there's limited numbers among people like they trade Nikes?
You know, I'm not sure. I'll check, but it would be great if it were. We've had a few of those kinds of things happen. If you remember last year with our Star Wars launch,
right,
that product got picked up and was traded on eBay. But I don't know. I'll have to check on the sneaker launch.
Well, we could be Frozen 2 could be like that.
Yeah, I agree. It's exciting merchandise. And you know, the interesting thing in terms of our relationship with Disney, typically their products that are sold under license are inexpensive, Maybe T-shirts might be the most expensive product, and we have very expensive products in the Disney launch, and it's pretty exciting to see how well that's taken up.
Now, around the world, you were terrific, but I guess I have to point it out because I know it's always in the news these days. You did have a slight decline in China, and you still make things in China. Obviously, China is a flashpoint. Do you think your company's being too colored by what is really not nearly as important as some of the things we've just talked about?
No, I think China is by far the largest geographic opportunity for the company. We have a great business there. We've been doing business in China on the selling side for almost 20 years, and we have a great brand recognition. We didn't handle that part of the business properly. We have new management in there. It's been in there about 6 months. We're right-sizing the business and doing the right things. But the brand is very strong there. Now, when we talk about what's typically in the news today is the tariff implications on sourcing product in China. And we've, over the last several years, been moving product out of China, not because we don't like China, but frankly because there's been better opportunities in other sourcing countries. Now, some things, for example, some of the Sorel product, which is highly technical, we can't move quickly out of China. So we're paying additional tariffs on that merchandise, which we've been very clear it's bad for consumers globally, bad specifically for consumers in the United States, and we're free traders. We like the opportunity to sell more merchandise at better prices to consumers.
Well, you offer a great bargain because of the high quality of your goods, so I understand your desire not to have governments make it even more expensive than it should be. Thank you so much to Tim Doyle, President and CEO of Columbia Sportswear Company. Stock's too cheap, guys. It's been a winner the whole way. It's going to stay a winner. Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.